The next guest has seen a lot in his career, and maybe that's why he's so optimistic. And he's reiterating his 2026 target, 7,600 for the S&P. He says the best way really for you to be positioned is with a barbell approach. So let's bring in now B. Riley Wealth Managing Chief Market Strategist, Art Hogan. All right, my man, you look great. You've been through a lot of wars. You look great. All right, let's talk about the formula for a moment, though, right? Industrials, financials, healthcare, and then on the other side, these mega cap AI trades. You know, I was talking earlier in the show about how it feels like from time to time, the script is being rewritten and Mag 7 and Mega Cap are actually treated as de facto safe havens in this market. So it's a little more confusing than it used to be.
It certainly is. And if you look at technology in general, during the course of this 4 weeks that we've been in this event in Iran, technology is the second best performing sector in the S&P 500 for a lot of reasons, Charles, and energy obviously the first. So those reasons are it came into this event at multiples we haven't seen in years, and it's more immune to higher energy prices in a real sense. So I think that's one of the things to think about. But the other side of that barbell approach, obviously, financials beneficiary of a later regulatory touch. All those changes are coming into play now. Healthcare is really going to see a lot of M&A activity in that later regulatory touch world. And one of the worst performing sectors last year, always does well in a midterm election. And obviously industrials for everything.
Right,
In the industrial group, you've got the AI adjacency for data center build out, but you've also got, when you think about the aerospace and defense names, they're all in the industrial sector. So I think it's a reasonable balancing act there.
Let's go to financials for a moment, because I had a great guest on earlier talking about the potential contagion risk to banks because of what's happening in private credit. JP Morgan, I'm in that. We were up nicely. We gave up those gains. Visa's been under a lot of pressure, although I didn't see the reaction today to stablecoin news. It may be rebounding. You're confident, though, they'll weather this private credit storm?
I am confident, and it's interesting because the group trades as a sector, and we're concerned about private credit and private equity, for some pretty obvious reasons. But, when you think about the default rate so far, it's gone from 5.4% projected to go to 8%, and they're taking the entire financials down with it. You haven't had the ability to get in JP Morgan at the ratio is trading to its net asset value or its multiple or its dividend yield and the better part of a year, and they're doing everything right. Visa is the backbone for all payment systems and will continue to be so. So I think that when you look at those two names, they shouldn't be thrown out like the baby with the bathwater with the rest of the financials.
Energy, you've got four names: Chevron, Devon, Halliburton, and Cheniere. I just want to focus on Cheniere. Because I'm reading that part of this strategy with the administration is some are calling it weaponizing natural gas. Certainly natural gas playing a bigger role. Qatar's offline for a long time. It feels like this stock should have a lot more room to the upside.
It certainly should. And they're in the phase of their development now where they're actually harvesting all that capital investment they did over the course of the last 5 years. Biggest player in the world, will continue to be one of the biggest exporters in the world. And we're learning every week how important LNG is to everybody in Europe and the rest of the world, and how important it is to people in Taiwan that are making all of our semiconductors. So I think LNG is going to be one of the best plays, and I think it's got a lot of runway in front of it, agnostic to what happens to the price per barrel of oil.
I got you. Hey, technology, you've got all the big names here, AMD, Broadcom, NVIDIA, and Microsoft, Apple. Is there one, though, that has to lead the parade, so to speak? For 3 years it was NVIDIA. They set the pace, they set the tone. Is there a name like that right now?
I think Apple's a name like that right now, Charles, and I think the reason for that is twofold. First and foremost, they're having a blowout in the uptake of their iPhone 17, and they're now coming around to their AI strategy. They partnered with Alphabet or Google to use that to help Siri, and that's just who they're partnering with domestically. They're going to partner with somebody in Asia to do the same thing. So I think there's a lot more wind behind the sails of Apple, and could clearly lead the rest of the group. As we see a resurgence in technology investing, which we started to see during the course of this war, and I think we're going to see more of that if we get any peace breaking out here.
Yeah, I think there's been a re-rotation, if you will. Before I let you go, healthcare. Now, you mentioned acquisitions. I would imagine Lilly wouldn't be part of that. Is there one of these names a potential acquisition target?
No, I think it's they're the acquirers, and I think that there's a lot of build back of blockbuster drugs that are coming off patent that will need to be done. And there's a lot of attractive small, mid cap, and even large cap biotechs that are in late stage 2 or early stage 3 for a lot of interesting drugs. So when we think about that world, we think about the fact that there hasn't been any real M&A for a while, and the new regulatory environment, it will likely get much easier pathway to getting deals approved.
I used to love merger Mondays. You're coming in as a big deal, right? Get the week started right. All right, thanks a lot, my friend. Appreciate it.
Always a pleasure. Take care.
See you soon.